Okay, good morning, everyone. Welcome to spring semester. Okay, this is international tax. Right? Okay, see a lot of familiar faces, so unfortunately, a little bit of this morning is going to be redundant to you. Bear with me. If I repeat something, maybe I'll repeat it in a different way that you didn't hear in prior classes of mine. It might resonate to you. But there's going to be new stuff, obviously, as well today. So I wanted to start off before I forget. Beta Alpha Psi, our accounting organization here on campus. The chapter is phenomenal. The two professors that oversee it are fantastic. They have a steady drumbeat of meetings, and they start right off Wednesday. Okay, how many people are planning to take CPA exam? Okay, quite a bit. How many of you are planning to take a review course? I'm a huge proponent of review courses. When I was in your shoes, I really like structure. I like somebody to show me the path, show me what I have to do. It's an intimidating test. At any point in time, it might have a 50% pass rate, so it's one of the more strenuous professional exams that are out there. But I always felt like, and I'm sure you're the same way, you're going to be sitting here, hard work doesn't faze me. Show me the way. Just tell me what I got to do. And then let's chop it up into actionable items, and then I can handle that. That's what these companies do. They are fantastic at that. They've been teaching how to take this exam for decades. They know it frontwards and backwards. They know what works well. They know what doesn't work well. So you can deviate and go on your own and try to figure it out, or you can take a well-worn path. And they can take it. So I find it very, very important. This person that's talking here actually works for Becker. Becker is one of the top courses that are out there. Blind is another one that's very active on campus. Both of them are equally good. But she will talk a little bit about the review program that they have and kind of approaching the exam, when to take it. I know a lot of you have questions on when does it fit into your schedule, when do I want to be done with all this and everything. I do feel it is well worth your time to do these things. It is a one-time thing. You take it, pass it, done. You don't take it again, right? And you always have those 3 letters behind your name. So it is a credential that is well worth the time and effort. Okay. I just installed Apple TV so that we got this all up and Okay, today's going to be very casual. I'm just going to talk a little bit about the course, the subject matter, and then pass along some best practices that I think that you can start incorporating into your daily schoolwork. So, first thing you see there is I'm a professor of practice. What that means is I did not come up through academia. I did not spend my entire working life on campus. This is my 4th year at WashU. Previous to that, I spent 25 years at PricewaterhouseCoopers, PwC. Nobody knows the real words anymore. They only know the alphabet soup. So PwC is where I spent my career practicing. All of that time was in international tax. So this class is my bailiwick. I love this area. I developed these courses, and if you're taking Advanced International and Spring Half A, Half B, I also developed that course as well. So I am fascinated by this area. You are all have either taken corporate income tax or corporate taxation, or you are currently taking it. Is that correct? Right? Okay. The reason I made that a co-requisite at a minimum is because I want you to think about, you need to know domestic taxation of corporations. Okay, that's a base. So think of just a company that is completely and only operating in the United States. That's what that course will be. International tax is taking that company and then it doing activities abroad. Okay, so that's why you got to know the base and then what's the nuances with international tax on top of that. One of the reasons I retired early from PwC. I spent a lot of my time, I've talked to several of your colleagues here in the classroom about the profession. I had loved my time in accounting, practicing it. In tax was my entire career, but I think it's a fantastic career. It's a well-worn path for young people to get involved in the business, and you are not limiting yourself in any fashion as to what areas of business you ultimately want to end up in. I have seen people go on certainly to be controllers and CFOs. I have seen people become CEOs. Okay? This accounting background, the language of business that you all have heard is really true. That internal kind of base of just knowing how numbers come together, how they're presented, and how companies talk to the marketplace and investors, and lenders, and regulators, that will never change. And that is incredibly important to the capital market systems in the United States and the world. And so I think that's why you see people that are business leaders who have come through accounting. It's just when they walk in the room and somebody's pulling up a report or talking about a financial statement or talking about a journal entry or something, they're right into that. They know exactly how that is because all the things you're doing as a business ultimately come down to how do you report that information out to the world. Okay, so one of the roles I play here at WashU is to talk to young people that are interested in accounting about how do you go from sitting in a classroom like this to becoming a practicing professional. So I really enjoy that part of my my time here at WashU. I did a lot of that at PwC. I had about 15 people working for me on a day-to-day basis. I had other people in the big office. I always practiced here in St. Louis. We had about 400 people in the St. Louis office. So I spent a lot of time and pride in helping people, in small part, helping them progress in their careers. So get promoted, get raises, start families, start their lives, that type of thing. So now I feel like I'm just doing it a few years earlier than when you guys are starting your careers. I'm kind of trying to bridge the gap from campus to the workforce. So I spend a lot of time talking to students about the career, what does it entail, helping you kind of think through things about where do you want to go, where do you want to end up, what role accounting as a major or minor or master's could play for that. And then also going on to interviewing. How do I chase an internship? How do I interview? How do I prepare for that? Even since I've been here now 4 years, it's interesting. I talked to some people over break that were freshmen and sophomores coming in and just getting to know them. And I also had people that just graduated and, you know, kind of, I see both ends of the spectrum, you know, the congratulations, and they're all gung-ho that they're ready to start their careers and everything. So it's very fulfilling, kind of that timeline and seeing how people grow here. So I'm happy to meet with you to talk about anything in the course, outside the course, about the profession, whatever you want to do. Just send me an email. I check email all the time. It's a carryover from my prior career. So that's the easiest way to get a hold of me. But you can send me a text, you can call me, whatever, and then we'll set a time to get together. I don't have office hours per se, so but I schedule things all the time with students, usually around class times. Okay. All right. I wanted to start off simple with some a couple of polling questions, and so let's see if this works. Aha! Look at that. Okay, jamming. Okay, pull this up on your phone. I think I have options for you to kind of rank these things and just rank them as what you see fit. No right or wrong answers, and then maybe I'll talk about them a little bit and see what international taxation actually means. Is it working? Yes. Okay. let me just take some of these and talk about those. I'll just take them from order of magnitude. So how cross-border activities are taxed. So cross-border meaning a transaction where a tax resident from one country is doing something else and doing activities in another country. It's either investing, so it's more passive, you're getting an income stream from another country to your home country, or it could be full-on operations, manufacturing, sales, anything that's more intrusive, more permanent in nature could be that as well. That is clearly what international tax involves. And so what I was doing, so I'm in St. Louis, so it was really interesting. So why would you be doing international tax in St. Louis? People think of it as a coast thing or something like that, or a large market activity. But St. Louis has a lot of historical major corporations. Many of them have been purchased over the years by parties or acquirers that are outside the United States, but their operations are still based in the United States. Many of the North American operations are still based in St. Louis. So think of Ralph's and Purina, the big pet food company. It is owned by Nestle out of Switzerland, but everything's run out of St. Louis for the pet food industry. Anheuser-Busch, one of my major clients for decades, was obviously the #1 U.S. brewer, but it's owned by InBev, which is a Belgian corporation that bought Anheuser-Busch in 2008 and went through that transaction. I'll talk about a lot of that stuff during this course. But so major operations still in the United States. So when the practice that I was doing in international tax, there's two terms I want you to know starting today, is outbound taxation and inbound taxation. So both of them start with where are you practicing? Okay, I was practicing in the United States. Okay, so I always like to think of my hat. I had my U.S. tax hat on. I was just helping companies invest outbound, so from the United States into another country. Okay, that's the traditional, most common way of international taxation. U.S. parented companies investing abroad. Okay, that's manufacturing, that's sales, that's R&D, that's anything that you drive business, but it's outside the United States cross-border. We'll go through all the issues that are dealt with that in this course in advanced international tax. Contrast that with inbound taxation. So I'm sitting in the United States, got my U.S. tax hat on, a non-U.S. company investing into the United States. That's inbound taxation. That's InBev buying Anheuser-Busch. That's Nestle buying Ralph's and Purina. That's a non-U.S. company deciding to manufacture in the United States. That's a non-U.S. company deciding to sell into the United States. Okay? So my practice was both. And that's because St. Louis as a marketplace evolved over time from those historical large U.S. multinationals to many of them were purchased by foreign companies. And so my practice had to change. And I found it fascinating because think about what Anheuser-Busch is. A major U.S. Domestic beer manufacturer with foreign investments underneath it. The biggest one being Mexico. They own Grupo Modelo, which makes Modelo and Corona, underneath the United States. InBev bought the U.S. stock of Anheuser-Busch in 2008. So now they're inbound. That was the best client ever because I had both issues. I had outbound issues because they had investments underneath the United States. I had inbound issues because I had non-U.S. ownership. The U.S. tax system is so complicated. Corporate taxation that we'll talk about next course, so complicated. Outbound investment, ultra complicated. Inbound investment, ultra complicated. So I thought of it as taxation on steroids. It was just crazy. Still is crazy. The world is changing. We're going to start introducing that today. So my point being is, if you're looking for something that is completely challenging to businesses, that inbound, outbound nature and just the degree of complexity that domestic taxation and then having to deal with all these other countries at cross-border activities. So certainly how cross-border activities are taxed is important. I'll do the second one. Understanding the tax rules of all countries. I would say, depending on your definition of understanding, I agree with that. So I'll take my InBev example in the Anheuser-Busch. I needed to understand how Belgium dealt with transactions that were involving the United States. I was not a Belgian tax expert. Okay? International tax is not knowing all of the tax rules of every country in every world. That is impossible. I've worked with 2 people in my career who came close to that. But they operated on like a different human level than I did. So most people just can't fit that all into one brain. It's just too complicated. But having an appreciation, understanding what the rules are, what the topics are, and what the topics that might be most applicable, but then working with a colleague on the other side of that transaction in that country to understand how they specifically apply that in your context is the way you deal with these transactions. That's why the big 4 accounting firms dominate international tax, because they have a footprint around the globe in all these major countries, all these major cities, such that I could pick up the phone and call somebody in Belgium. I could pick up the phone and talk to somebody in Mexico for my firm, and we could work the cross-border transaction, because what a client wants is a cohesive answer. Tell me what both countries' rules are and what should I do so I pay the least amount of tax, right? And the reason this is challenging is because the second to the bottom one there, relatively stable area of taxation. I'm glad nobody put any points on that, because it is not stable. It is completely unstable. But guess what? Business is still going to go international. I don't think the globalization of business is going to stop anytime soon. So things are just chaotic all the time. Laws are changing. Companies need help. So that's why it's a very fruitful area to be an advisor, to be a consultant, to be a professional involved in these transactions. So in the headlines right now, Venezuela. I did outbound work for Peabody Energy, which is based here in St. Louis. They always dabbled in the coal because we all think of Venezuela as oil now in the headlines, but they do have coal as well. They would have a hot and cold relationship with Venezuela over the years dealing with coal. They would get nationalized, they would get booted out, they would lose money, they would go back and lick their wounds, come back in about a decade. That's what President Trump's trying to do now with the oil industries, to lure them back in to help there. So that type of thing, that geopolitics play a role in all of this as well, along with the rules changing. So it's just a completely fascinating area. A challenging topic, I covered that. An ever-changing area of taxation. It is changing. It used to be, when I first started my career, that it was just a collage of countries doing their own thing. So everybody was a sovereign country. They had their own rules, and you're an advisor trying to help a company do business in 15 of these countries, right? Really hard. But now there's a little bit of cohesiveness around that. We're going to talk about the OECD, the Organization for Economic Cooperation and Development. It is a organization based in Paris that is of the largest economies in the world. And they are getting their act together from a cohesive nature. And so now what we have is kind of like the OECD leading the rest of the world, and we have the United States, right? It shouldn't shock anybody that our current administration kind of does what they want to do. They don't report to anybody in Paris. They don't follow the norms. They do what they do. But we are probably the largest economy in the world with the largest companies in the world. So we have to work together in some fashion. So that's fascinating as well. And I'm sure that'll change over time as well as we have new administrations and things like that. Okay, I have one other one for you guys. Try this. What do you think the goals of international taxation should be? working on you guys? He's gotta have goals. We gotta have goals. Okay, I'll start talking about these. The trick here is there's no wrong answer. It depends on your perspective, depends on your political slant. I'll take the first one, maximizing collection of tax revenue for the government. From a government's perspective, that's a goal. It may not be the goal, but it is a goal, right? It's to collect revenue. United States, we know we are a country that runs deficits. Meaning on a current basis, we spend more than we take in. Every year that adds to a debt. We have a large national debt that you guys will figure out how to pay in your generation and other generations, but that's our gift to you in part. But maximizing the collection of revenue, okay? That is an important role. You will see what we're going to talk about towards the end of this class period is a lot of planning around international taxation was to drive down the amount of tax that a company would pay. Very fruitful area for a planner, a tax advisor, to try to mitigate the level of tax. The tension is that governments are trying to pull more tax out of these countries, out of these companies. So think of the high-tech industry here in the United States. They report phenomenal profits, phenomenal cash flow. Very few countries in the world think these companies pay the right amount of tax. So they have an army of advisors helping them to pay the least amount of tax. Governments around the world are working really hard to extract more tax out of them. And that's jobs for tax advisors and consultants. Taxing multinational individuals and corporations fairly. There is a segment of the political spectrum out there that says, I know I need to extract revenue, but I want to do it fairly because I understand that business is important. What does that do? That drives jobs. I want jobs. I want a standard of living that's high for my residents, and I'm interested in doing that in the fairest manner possible. So if I can help business, but you pay your fair share, but I'll help you as well grow, that's my goal. So that's certainly a goal of international taxation. Assisting a company in achieving a single layer of tax on a single item of income. Many companies would certainly like to lower their tax liability on a global basis, right? Less tax expense in the income statement means more earnings, which means higher earnings per share, times your multiple, higher market cap, right? That's what companies are trying to do, grow in size. So that was a historical item. Now that countries are trying to be more active and trying to grab more income, it's almost shifted a little bit to less proactive planning to a little more defense, meaning that I don't mind paying a single layer of tax on a single item of income, but I really want to guard against it getting higher than one layer of tax. What I mean one layer of tax is one tax-paying body collecting tax on an item of income. If I get two bodies of government trying to tax the same item of income, that's double tax, right? Companies do not like that. So if you think about some of the fact patterns I talked about, that's really prevalent in the international space. You are susceptible to having multiple countries try to tax your same item of income. So to the extent you can play defense and just keep that down to one layer of tax on one layer of income, that's probably really good in today's environment. Maybe try to do a little better on the planning side. Allocating income to the country of sale in the transaction. We're going to be talking about this quite a bit. The OECD initiatives that I mentioned, we're going to be talking about Pillars 1 and Pillar 2. Pillar 2 is about this item, okay? Think about a high-tech company in the United States. I'll pick on Amazon. Amazon's an international company. They can sell into a country to a resident who sits on their computer in another country can buy something from Amazon or the local subsidiary of Amazon, and something shows up at their doorstep, in a day or two. Amazon does not need to physically be located in that country to do that business. In the past, historical, decades ago, we usually had boots on the ground or a physical location to be able to do business in a country like that. But companies have figured out ways to do business on a great scale without being physically present in the country. The standards for which to collect tax in that local country, the country of the customer, was physical presence. So they're sitting there seeing, wow, I see all these cloud companies, all these internet companies doing business with people in my country, and they're not paying tax in my country because they don't have that physical presence. They don't have employees. They don't have bricks and mortar facilities in my country. So they tried to lower the standard. That's what Pillar 2 is. The OECD is trying to lower the standards to subject those countries to local taxation. Well, guess what? Those companies are pushing back as well because they're like, okay, that sounds like a great idea, but how are you going to do that? How do I know I'm not going to end up paying more tax? That item we just talked about. How am I going to have more? I might be susceptible to having more than a single layer of tax on one item of income. So there's this push and pull between that. But that is a hot button item right now. And the United States, there's going to be a lot of political talk here. You guys won't know my political affiliation, but you can't separate tax from politics. Okay? So think about that in today's administration. The Trump administration, who do they listen to? They listen to U.S.-based companies that other countries are trying to take more of their income. That gets an audience with the politicians in the United States. And so there's this frustration with the OECD that the Trump administration has had. But you can't ignore it because these companies are doing business in those other countries. So how do we come to an agreement around these things when there's this tension in there? Okay. Allocating income to the country of the residence of the taxpayer. So my example of those U.S. tech companies, that they're resident in the United States because they've been created under U.S. state law as a corporation, doing business in other countries. So the United States taxes them on their worldwide income, which you'll find out on Wednesday. Other countries are trying to tax them on the sales. So that's the double taxation issue that we have to deal with, that defense mechanism of trying to pay one layer of tax on one layer. Assisting a taxpayer in maximizing their after-tax position. I have not ever met a CFO or a controller who does not think that their company pays more tax than they need. Right? They are trying to manage every line item on the income statement. Right? Sales, cost of sales, advertising, compensation, tax, everything to get to the best bottom line possible. That's capitalism, right? Tax is one of those. So you have if you're a tax advisor and you're helping companies try to do their stuff, it's nice to have that push from above at the company saying, well, I'd really like to pay less tax. Why? Because that's more money at the end of the day that they can reinvest in their business, right? Expansion, research and development, people, everything that they could invest those extra dollars in instead of paying taxes. Okay, so the moral of this is these are all goals of international taxation. It depends on who's in charge, which party is involved in the United States to make the rules. We have midterm elections coming up this year. You will hear tax being brought up. You probably won't get a tax bill. I'll talk about that in a moment. In 2026, just because there's not a driving need to have a tax bill right now. But all of the rules that we're going to talk about in this course were developed by the Republican Party. Okay? Trump 1.0 in 2016 passed the Tax Cuts and Jobs Act. That was the seminal bill that changed the way international taxation is applied in the United States. Okay? They had a bill last year, the One Big Beautiful Bill Act. That's his language, One Big Beautiful Bill Act. But that was passed on July 4th of 2025. That tweaked rules as well, but kept the general framework that was enacted in 2017. So guess what? Not one Democrat voted for either one of those pieces of legislation. Okay? We have midterm elections coming up. The party in the United States, the party that's in control, typically loses control of the House in the midterm elections. I think it's always, if you're a sports fan, you know, you've probably heard the story, the most popular player is the backup quarterback. So usually people are like, well, I don't like what's going on. So then the midterm of the presidential term, they bring the other party in control of the House. So that could happen in November of this year. But that still doesn't mean the Democrats are going to have control, right? Because we'll still have a Republican president, may still have a Republican Senate. But that would set us up for the next presidential election, and maybe we have a change in parties and control. If you do, these rules are going to change. That can be frustrating for a practitioner, but if you think about it from a business development side, it's actually really good. Because things change, companies have to change. They change, that's fees for professionals. That's either they hire you to work for them, or they hire the firm that you're employed by to help them. So the worst thing you can have as a tax professional is simplicity. Something that's sustained year over year, and it's very simple. They don't pay for that. So it can be frustrating to learn new things, and well, I just learned that, now it's changed again, all that type of thing. Well, it's okay. You get paid to do all that stuff. So I'll just keep that in mind. Okay. Okay, a little bit on our tax curriculum. So we have taxation of business entities. You guys, many of you are in that in this semester. We're going to be talking about corporations in there principally, secondarily about partnerships. But that will give you the base from which this course will take off from. We also have the Volunteer Income Tax Assistance, VITA, what we refer to it as. That's going to be our experiential learning class for usually our tax-inclined accountants take that course. It's going to apply the stuff we talked about in taxation of individuals last semester in the real-world context. You're going to be helping people fill out their tax returns. Okay? So it's a good practice of, I remember we talked about that, so I got to go back and look at that. But you're also dealing with people, right? People that come in there are not tax people. They're like real people who have a job, and here's all the stuff my employer gave me. Here's all my receipts. You file my tax return. You got to sort through that, help through that. So I like that from a perspective of getting you out of the bubble of WashU into the real world, because the real world's messy. Clients are messy. Facts are messy. And having to just work through those things is a great little training effort. And you're not filing the tax return on your own. There's a layer of review at the company that oversees that experiential learning. So it's a lot of more experienced tax people that are volunteering their time. There's some retired people that volunteer their time every year there, and they will review your work, and so you get feedback on that. So it's not intimidating from a perspective of, wow, I don't know if I could actually do a tax return. You're doing a small part of it, and you're learning. But I think it's good to kind of bridge the classroom. You guys are in international taxation. Half B, we have advanced international taxation, where it's the same concepts that we're going to be talking about, but we're going to go into more in-depth nuances about international tax. Okay. Those of you that have been in my course, you know I like talking about pie charts. I think that's a very healthy way to think about the tension and what companies are trying to do and what countries are trying to do. So if we have just solely domestic activities, so we're dealing with a U.S. corporation that just does business in the United States, then we have a federal corporate tax rate of 21%. It is a flat tax rate, meaning that if I earn $1 of income, it's 21% of that. If I own $10 billion of taxable income, it's 21% of that. That differs from individuals, right? Individuals, as you make more, you pay a higher rate of tax on that incremental income. We do not have a progressive tax rate system in corporations. 21%. 21% is fairly competitive. It's come down from 35, which was the tax rate throughout my career. It came down in Trump 1.0. His view and largely the view of corporate America was 35% was too high. Relative to the rest of the world, it was near the top. Okay, so competitiveness of our companies internationally is very important to a large number of our politicians, and I think probably a large number of us. We would like our companies to be competitive around the world. Why? They can hire people, they can invest, they can grow, they can make bigger and better products, right? So, 21% of everything that a U.S. corporation makes goes to the federal government. Okay? I want you to think about that as they are a partner in the taxable income of a corporation. They are a very powerful partner. They write the rules to define what their 21% is a part of. How big is the pie? They write the rules. They can change those. All they have to do is pass a law. They enforce those rules. Right? We'll talk a little bit about the IRS and what's going on with the IRS now. The IRS is a bureau of the U.S. Treasury Department, but they enforce the laws of the United States. That does not mean that they grab you by the ankles and shake nickels and dimes out of your pocket. But they do. They are in charge. They are professionals. They are in charge of making sure that you're compliant as an individual and as a corporation with the laws as they apply to you. Okay? So I like to think of that as they are a partner in your net income. Your client will probably want their part of the pie to be as big as possible. Why? That's money that they can reinvest in their business. The government, the tension is they want to get the most revenue as possible, right? Because we have deficits. We have national debt that's got to be repaid. So this is what happens in a domestic company. What about when I add a new party to this? So I'm a domestic company and I've decided now I'm going to start expanding abroad. Now I've introduced a third party into my pie. That's the foreign government in which I'm doing business. So think of all the tension that's here now. I got the two on the left, the client, my employer, or my client, and I got the U.S. government, but now I got to fit this other government in there, and who are they taking the money from? And I guarantee you, each one of those three parties typically thinks they're getting shortchanged. I'm not getting my fair share. The company's making too much, the U.S. is taking too much, or the foreign country's taking too much. So the international tax practitioner plays in that area. Try to make sure it's all functioning. Let's not have more than one layer of tax as possible. Let's see if we can get on the affirmative side and try to keep more for our client. Okay? Along the career side, I do have a couple tools. I want to make sure that those of you I have not met yet know that I have out there. I do a series of interviews every semester. I'm calling on careers in accounting. On the right side there, I have a playlist on YouTube. You can click on that. What I do, since I've been practicing in this marketplace my career, I know a lot of practitioners. They used to be my clients. A lot of them I used to work for. They used to work for me. But I just know a lot of people, so I bring them on campus. You guys may have seen, and I've been in front of your 2610 courses if you were a WashU undergrad. But I bring them in. We talk to those 2610 courses about what an accountant actually does. I have auditing category, a tax category, and a consulting category. Those are roughly the three areas that accounting firms have as operating divisions. They call them different things. You might hear consulting called different things, advisory, things like that, but consulting. And so those, I have those practitioners, and then I interview them at our recording studio, just around the corner here, and post those so that everybody can see those. But it kind of gives you a flavor of how these people progressed in their career. What are they doing now? And there's some really interesting stories there, and I think it reiterates what I was telling you before. You might think of, oh, I go into an accounting firm and I'm going to be an auditor, and I'm going to be this auditor for my whole life, and that sounds incredibly boring. Hear where these people are, where they're doing and what they're doing now. It's pretty fascinating. So that's there for you if you want to take a look at that. There's a salary survey here. I know people are obviously very interested in your shoes as starting salaries. Good news, starting salaries in accounting are going up. They've been raising the salaries. These firms have been around in some form, the Big Four, for over 100 years. They're not going away. They will compete for talent, and if it takes dollars to get your eyeballs to look at them, they will. They are run by accountants, so you have to drag them grudgingly to the table, but they will part with cash to get your attention. And so I've heard various instances of starting salaries going up by 10,000 across the board. This is my playlist. So you'll see on the right-hand side, these are individuals. Some of them are WashU alums. But you can just click on those and let me know if you have any questions or you want to reach out to any of those people. That salary survey I mentioned, just a few highlights about that. It's by Accounting Today. Accounting Today is a trade publication. I like to follow it because it really keeps you informed as to what's going on in the profession. What are firms doing, what's going on with hiring, what's going on with regulation, what's going on with private equity. You probably may have heard that private equity is making investments in the smaller accounting firms, and what impact is that having in the industry. But Accounting Today, this is a survey, so they sent out requests to practicing professionals. Tell us what you're making, what's your level, what firm are you working for, and what are you making. And so they compiled all this data. Some of the interesting things taking away from that is starting salaries are from 75 to 85, which is the median to the 75th percentile. That's up from historical levels. The manager level, which is kind of a seminal title in public accounting, is usually a 5-year process for a normal progression. That ranges from 130 to 160. That rings true to the managers that I know out there about what they're making, and people who are working for me. The last one there, this is one I don't think people realize, but partners at Big Four accounting firms can earn upwards of $1 million a year. I don't think people know that. I had a 2610 professor ask his class, what do they think a partner in a Big Four accounting firm makes? And there were a couple people who said $150,000. Way beyond my belief as to what that you guys should be thinking about. Partner is a carrot that is hung out there. It is not an easy process. Right now, the timeline can be 12 to 13 years to make partner. And it's not just time and grade that you make it. You have to have ability to bring in business. You have to have ability to have special skills, those types of things. But those are what you learn during those 12 to 13 years. You don't have that today. Okay? When I started, I had no aspiration of making partner. I was going to pass the CPA exam, get my work experience, and then try to get to manager, because that's a good level to get to in your resume, and then go to work for industry. So when I say public accounting, that's accounting firms. Industry means corporations. Okay? So many people work in public accounting and then jump over to corporations, because that's where they hire from. You might, if you're interviewing here now, you probably have felt like corporations don't typically hire you into accounting, straight out of school. They want you to go to an accounting firm, get trained up, get like a super master's degree, I like to think about it, be very, very valuable and competent, and then they hire you 5 to 6 years down the road, and they pay you a bunch of money, give you stock options, lots of good things like that, but you're a very, very competent person. The reason that dynamic happens here in the United States that way is because they don't have the infrastructure to take on your training. AT&T doesn't have accounting training part of their overall employee training. Accounting firms do. My last year there, I was still going to training. You train throughout your career. That's why you become so valuable in the marketplace by having started there. So, but anyway, if you do choose to stay there and you have the right skill set, you can get to these upper levels. I retired at 53 because I could. I'm choosing to do this, so it's been kind of a game changer for my life, but it is possible to get to the highest levels. Okay. our course topics. So the way we're going to go through this is Chapter 1, I would like you to spend time with Chapter 1 before Thursday. We're going to spend more time about introduction to international taxation on that point. Then we're going to do tax jurisdiction. Tax jurisdiction is who gets to tax whom on what income. Like, what are the rules? So it's not just the wild, wild west where everybody's trying to dive in and get their part of the pie. There are rules on where jurisdictions are able to tax. So I'm on that in Chapter 2. Then in Chapter 3, we're going to talk about sourcing of income and expenses. So what income is sourced to what jurisdiction, and then what expense goes to what jurisdiction. You can think about what we're doing there. We're starting to then divide that pie up between the countries. Okay? The way we do that is through sourcing rules. We have to spend some time looking through income items and expense items, and we have different rules on how we source that. Then we do foreign tax credit and the 100% dividends received deduction. These are ways that the United States, because we're in the United States, so we're talking about outbound or inbound investment, but from a United States perspective, how do we limit one layer of taxation on one item of income? We do that through the foreign tax credit, predominantly in the United States. Foreign tax credit means if you're doing business in another country, you're a U.S. company, you're going to pay tax in that other country. We'll talk about that on Wednesday. Then the United States taxes the entire global operation of that U.S. company. So right off the bat, we're susceptible to double taxation because that foreign income was already taxed in the foreign country, so you're doing business there. And the United States wants to tax everything. The way we alleviate that is we give you a credit for what you paid on the foreign income in the foreign country against your U.S. tax on that foreign income. That sounds great in concept, really messy in practice. So there are, you put a lot of zeros on these things for large multinationals that are operating in 50 different countries. Maximizing their foreign tax credit is the principal way that they try to limit the double taxation exposure. So we'll spend some time talking about that. Anti-deferral regimes. What this means is how does the U.S. tax the foreign income of the foreign subsidiaries? So I like to joke that I had a partner of mine, and she worked for a large company based here in St. Louis. It was a U.S.-based multinational, so a U.S. parented company with lots of outbound investment. She had an org chart on her office wall. So an org chart is the parent company and all these boxes and triangles and stuff of all their investments around the world. This company is over a century-year-old, doing lots of transactions over all those decades. This thing was as big as the wall. And there were like hundreds of boxes on that thing. That was the combination of everything they've done of their expansion over time around the globe. And so the anti-deferral regime means how does the U.S. tax those foreign earnings of those foreign subsidiaries in the United States? That recently just changed in that One Big Beautiful Bill Act from 2025. We'll spend time talking about that in Chapter 5. But this is a big item for those large U.S. companies. We're going to wrap up with some inbound taxation. So inbound taxation can usually take the form of two ways. So we have non-U.S. people. I will call it foreign. There's nothing, please don't take that the wrong way. That's just the language that the U.S. tax code uses for a taxpayer who is not U.S. Centric. So they call them foreign. But it's the same thing. I'll use foreign or non-U.S. But a non-U.S. investor investing into the United States. The U.S. market is a fantastic market for investment. So you have lots of non-U.S. investors investing into the U.S. market. What do? They get returns from that U.S. market. Dividends, interest if they're lending in, royalties if they're licensing in. So when those funds are paid out of the United States, we have withholding issues that we have to deal with. Withholding is the U.S. company might owe a $100 dividend to a foreign equity owner, but the withholding tax means that when the dividend is paid, they may not get $100. It might be haircut by the withholding tax that is then forwarded on to the U.S. government. Okay, so that's more of a passive investment in the United States, but the United States still taxes that income. Yes, ma'am.
The foreign persons, is that like people who physically don't live in the United States, or does that still include people that might be like on a green card and residence, but
Great
like
question.
hold different citizenship?
Great question. So typically it means a non-U.S. taxpayer.
Okay.
So you become a U.S. taxpayer if you're a U.S. citizen or a green card holder, or you have substantial presence in the United States.
Like certain
Those
visas.
three things, yes.
Okay.
And so those rules can change around the world because other countries have their rules as well as to when you become subject to tax there.
Right.
But typically, when I'm talking about a non-U.S. person, they are not subject to U.S. tax.
Okay, so then they have to go through this process to kind of get
So
taxed.
think of it as like a purely UK person. They just said, wow, the Mag 7 is a fantastic investment in the United States. I'm going to own stock in those companies, or in those companies. Well, those companies, as they make distributions out on that equity, that's the flows that will cover there on the U.S. Great question. So that's where you got to understand your client and what's their situation. Are they subject to U.S. tax? You have dual citizenship. There's somebody who could be a UK resident and a U.S. citizen. Right? So lots of complexity in this. Then the last area we'll talk about is inbound investment, where it's just full-on investment. Right? They're manufacturing in the United States because they have customers in the United States. And what if it's a heavy product and they can't make it abroad and ship it across the ocean to the United States with an efficient basis? So they want to make it in the United States. So they own manufacturing facilities in the United States. You're subject to tax in the United States as if you were a U.S. corporation for that business in the United States. Not for anything outside the United States, but for that business in the United States, you'll tax just like what we talked about in taxation of corporations. It could be sales, right? Fantastic consumer market in the United States. The U.S. consumer spends money, seems like, no matter what, right? Some segment of our society does. And so those companies that are based outside the United States want to sell into this market. So at what level can they sell into the United States before they become subject to tax in the United States? They could be conducting a U.S. trade or business. So that's the topics we're going to talk about this semester. Our textbook format, there's not a lot of great international tax textbooks out there. The one I've selected for this course is the best. I really like having the rules and then having the examples right after it. So you'll see, if you've been in my classes before, we'll do examples. You will sign up for the examples, hopefully. I will post those. I'm getting the list together of everybody here. You will sign up for those. What I would want you to do is come down, stand here in front of the class, present the example. Don't just read the example. I would like you to think of it as a business meeting where you're presenting, here's the facts, here's the rule, here's the answer. Okay? The reason I do that is not to be mean and get you out of your comfort zone. I do want to get you out of your comfort zone. I want you to stand up. I want you to get used to people looking at you, carrying your voice to the back of the room. And the reason I do that is because you're going to be expected to do that in the workforce. Okay? You're going to have to get used to talking in groups. And as someone who was an introvert my whole life, I can tell you it gets easier. You just got to do it. You just got to do it. Just get comfortable doing it. Nothing goes perfect. My presentation to you today is not going perfect. There's things I'm hearing that I should have said that different, said that different. That's okay. Nobody's perfect. Just try to impart information. That's what you're trying to do. I just want you to get comfortable doing that in the real world. So our class format will be slides, me guiding us through the slides, and you periodically coming up and doing examples, and we talk about the nuances of the examples. Okay? I view this as I'm not lecturing. I'm just trying to lead you through the material. Okay? I have more experience than you. I'm just going to try to guide you through it. Okay? I spend an inordinate amount of time, ask my wife, on my slides. I love my slides. Okay? So you don't have to love them, but just know that I spent some time with them, trying to make things very compartmentalized. So I learn in categories and sections. So I think it's easy in tax to just get lost in the forest. Man, it's just moving all over the place. It's crazy. So I like to break it down into just where are you in this particular area area? Are we talking about the foreign tax credit? Are we talking about an anti-deferral regime? Be in that area and then understanding the nuances within that area. So that's how we're just going to progress through this. I'll talk in a little bit about best practices I think would work well for you in this course and other courses, but don't let this build up on you without investing the time. You can't just come to class and then 2 days before the midterm, cram for the midterm, and expect to do well. So I can guarantee you this stuff will be swirling around in your head and you'll get lost on the exam. So it's building as we go. Everything builds on top of each other. The grading in this course, it's a half semester, so there's not a lot of things that we have time for. It goes super fast. Class attendance, 15%. So I will start passing around a sign-in sheet. You will sign in. Please only sign yourself in. I do not want to go down the path of trying to investigate whether somebody's signing other people in. If you are doing that, that is unethical. If you are asking somebody to sign you in, that is unethical. Let's all be adults. Let's just do the right thing. If you're here, sign in. If you're not, take it. Okay? If you're sick or something, please let me know. I do excuse absences. All of the classes are recorded, so you can make them up, but you won't get credit for being here. I think there's an element of being here that is important. Being present is important. So that's class attendance. Class participation, you can get those points in 2 ways. Multiple ways, but 2 principal ways. One is just participating in class, asking questions, making observations, raising your hand. I don't understand that. What did you just say? All of those are perfectly fine questions because I guarantee you others have the same questions popping into your head. Then doing the examples. Okay? So the people who do the best are doing both of those in this category. And again, I just want you to get used to being a participant. When you start your first job, I want you to be a participant. I don't want you to be in a conference room and not say anything. I don't want you to go through your first client meeting and not say anything. I've seen people who come from really good schools who are super smart and they're just quiet. And what I don't want to have happen to you is people can make the assumption if you're quiet that you don't have anything to say. You don't have any input. And I know that's not the case. So, in a completely protected environment, nothing bad is going to happen here. You can come up, you can't get the examples wrong, the answer is right there. Okay, so it's not a lot of heavy lifting to study the example, but I want you to just get into the idea of I can function in a group and just be a good communicator. Okay? Final exam is 65%. We don't have a midterm because we only have a term. So heavy emphasis on that, but it will be based on the slides. Okay? So the material that I draw from the textbook and put in the slides is what I think is most important, and the examples. If you can understand the examples and apply the examples, you'll see my tests are very example. I give you a bunch of facts and ask you questions about that. Okay? The test format will be about 2/3 multiple choice and 1/3 short answer. So I like the short answer because I want to see if you understand the topic, okay, and be able to verbalize it in words. But there will be no electronics involved. It's not take home, it's in person. I'll give you some notes that you can take and bring in. But I do not want to test you on how good you are with large language models. That doesn't accomplish anything. I want to know who's applied themselves to the course material and who's participated and who knows the stuff. And I want that demonstrated for that. I'm not going to chase and see who used AI to do something. That's not a productive use of time. Okay. Emergency response, the last item on here. I wish we didn't have to talk about this, but we do. This is a function of the society that we live in. Things can happen on college campuses, right? High school campuses. See it all too often. So I attend the emergency preparedness courses here on campus. One of those is active shooter responses. They have the WashU PD that comes in here. They have city police that come in and talk about what we should do. Okay. The reason I want to talk about that here for a moment is because it happens and we haven't talked about it. It's kind of chaos, right? So we have a very open campus. You guys know that. Somebody can just walk in right off the street and walk into our buildings. That's part of our openness as a community here at WashU. So what these professionals say is 3 things you do in an active shooter response. The first is run. Okay? Know where you are at all times and where is the escape route from what classroom you're in, what lunchroom you're in, wherever. We're lucky here, we go straight out these doors and we're pretty close to Forest Parkway when we can get off of campus. So what that is premised on is if we know where the situation is. Right? Hopefully you all have the WashU Alert app, but I'm sure things would go crazy if something happened here on campus. Just imagine that you're not going to have a lot of details, right? So this is premised on this, that we know it's over, in Simon Hall. We know we've got to get as far away from Simon Hall as possible. And we know we can get off campus. But if you don't know where you're going and you run, you might run in the exact opposite direction. Right? But if we do know, we run in the opposite direction. The second is hide. Okay? If you hide right underneath, what these professionals are saying is these are typically small windows in these rooms, and you can't even see in that window there. But if somebody looks in and they don't see anybody, the thought process is they usually walk down somewhere else, right? So we would all hide, do our best to make it look like it's a vacant classroom. Okay. The third and final is when those two are unsuccessful when somebody comes in this room. That's fighting. Okay. Think of all the things that you have next to you. We have water bottles, we have laptops, we have phones. If somebody came through those doors and we started throwing things at them, it's usually one person, right? It's a rogue individual that's typically having issues. But we could overwhelm them with items, maybe to a point where somebody could grab them and subdue them. But at that point, we're fighting for everything, right? But don't lose sight of that. And I just want to mention this because think about this in every classroom that you're in. If something happened, what would I do? Okay? And I hate that we have to do that, but that's the world we live in. Okay. My best practices for student success in this course, and I think you can apply this in other courses, and then I'm going to apply it to the real world because I do want to transition you in parts to the real world. So, this is not a 3-hour course, but it's a 3-hour course from the perspective of for half a semester. Right? So we need the same amount of time, but only for half a semester. So there's a rule of thumb that for every hour in class that you spend, you should spend twice that outside of class on the class material. Okay? So our class time per week, just rounding it, we're going to be at 3 hours, Monday and Wednesday, right together. 3 hours per week. During those 3 hours, you guys are doing fantastic, by the way, from a paying attention perspective. Okay? Attention management. Can you pay attention for those 3 hours while we're here? The reason I think that's so important is that's hard to do. That is a rare skill in today's world, right? We're bombarded by things that are quick and always trying to grab our attention. But can I block out an hour and 20 minutes and be present and be focused? I know your mind's going to wander. That's fine. When it does, can you gently bring it back to where we are? Right? Stop that. Come back to what we're talking about here. So try really, really hard to do that. Avoid the technology distraction. Close down. I know many of you take notes. I'm fine with that. But try to cut off the other stuff. Quiet pop-ups and DMs and all that stuff. Just put that stuff off to the side so you can be focused. What I think this is training you to do is you're going to be expected to do that when you're in your first meetings. You are not going to be able to look at your phone when you're sitting with the manager or the partner you're working for, or for the client that you're sitting in front of that's paying you money for your time, right? So get used to just like you have to get it out of sight, get it out of sight. But can you just, for a limited period of time, focus on the tasks at hand? The other thing I'll mention to you, I heard this story, and I think it's very, very apt. You guys have all worked super hard to get to where you are. Think of the person or people that were most impactful in your lives to get you where you are. Your parents, maybe a grandparent, maybe a mentor. Think about if they were sitting right behind you in class. And whatever you're doing, would you want them to see what you're doing? Are you watching a soccer match? Are you smiling because you're DMing with your friends? What would that person think of your time to help get you where you are? Okay? Look to participate. Right? Look for ways to just interject yourself. Hey, I got a question. We talked about this 2 weeks ago. What about that? How does that apply here? Or what's the difference with that? That's, again, trying to get your mindset ready to have a participative meeting when it really counts in the real world. No multitasking. I have read articles where if you think you can multitask, you are fooling yourself. The human brain is not capable of multitasking. What you do have an opportunity to do is do two things less than optimal, and if you chose to do one. Okay? So again, one-track mind. Can you focus while we're here? Okay, so that's the time when we're together in class. How are you going to use the 6 hours that the rule of thumb says you should spend on international tax for the next 6 weeks? I just broke these up in 3 before and 3 after. So 3 before, preparation. Okay? Read the assigned material before you come to class. I guarantee you class is going to be more impactful to you. Because I'm going to draw things out. I'm going to give you examples. I'm going to talk about real world stuff. But can you do that prep stuff before you walk into class? Okay? I understand AI is out there. I will take it if you want to summarize and have AI give me the 15-minute version of this chapter. If that's all I can get, I'll take that. But don't rely on that too much. I do think details matter, and it's not a voluminous amount of reading. The authors are really good. Just reading through that material, I think, will really, really help you. And it may not be 3 hours. It might be 2 hours for you. It might be very fast reading. But I'm just trying to give you kind of the framework of how to think about this. I would offer to set up those your weekly time with some review time. If that's Saturday morning, I'm a morning person. I like to do things before my family gets up. If it's Sunday night as you're getting ready for the school week, maybe that's the time to do it. But take a period of time and think back to what we talked about the prior week. Did I understand all that? Is there a particular topic that I didn't quite grasp and I didn't flag that? I got to go talk to Professor Plunkett, get some time with them to talk about it. I'm going to talk to a classmate, see if they understood it. This example, I didn't understand it. Whatever. But have a plan to address that weak point. Real time. Don't wait until the night before the exam and panic. I don't get it. Send me a frantic email. I'll respond to the frantic email, but it's much easier if you'd have done that in the second week or the third week than the 6th week, right? Clean up your notes. I know this is a hard thing to do, but it was so impactful in my career. When I was in a meeting, I was taking notes, and I'd write things down on the side of a PowerPoint, and I'd scribble stuff. And if I waited to look at that for 2 months and then pulled it back up, I'm like, can't even read that. I don't even know what that means. Or I starred that. Why did I star that? But if I did it like in a day or 2 after, then I can remember, oh, I know what that was, and scrap that and rewrite it and everything. I think when you do hand to paper, hand to pad, there's something in your brain that, like, do I really understand what I just wrote down, or do I not understand what I really wrote? And how am I going to address that? So I think just getting into that habit of maybe I clean up my notes, I understand everything. Is there things I got to do to do better there? I think is a really, really good way. And then when you get to the final exam, it's all just kind of like reviewing things, pulling it all together. Now maybe I can see the full picture. But I think this is this can be very impactful for your time at WashU. And I will just, okay. A couple things I want to introduce. So there's changes on the international tax landscape. I mentioned pillars 2 and pillar 1. Seems odd I started with pillar 2 instead of pillar 1. Sequentially, you would start with 1. But they were both proposed by the OECD, the Paris think tank I mentioned. But pillar 2 just moves more rapidly from an international implementation standpoint than pillar 1. So pillar 2 just is earlier in the sequence, even though it's number 2 instead of number 1. So this is where we're dealing with the global minimum tax on multinational profits. Okay. I know you don't understand this yet. We'll cover this, but I just want to introduce it to you. So pillar 2 is saying that org chart I mentioned with the U.S. parent and all those subsidiaries around the globe. What pillar 2 is saying, should I in each one of those countries pay a minimum level of tax from a rate perspective, not a currency perspective, a rate perspective. The OECD has set that rate at 15%. What that means is if my foreign subsidiary pays tax at 10% in that country, then the parent jurisdiction can top it off with an extra 5% to get it to 15%. That's the concept of the minimum tax. Is we want those profits to bear a rate of tax of at least 15% global. What we have here is the United States has a separate set of rules. We don't adopt the OECD set of rules. Trump 1.0 in 2017 Tax Cuts and Jobs Act had a different minimum tax regime. So what just came out, it was in last week's Wall Street Journal, page 1, was the OECD finally accepted the agreement that U.S. Treasury Secretary Bessent had with the G7 leaders, which said, we are not going to adopt your rules, but we have our own minimum tax rules that operate generally similar, with the same objectives in mind, but different details. And so what they have adopted now is what they call a side-by-side agreement, meaning that the U.S. does not have to adopt the OECD rules. The OECD rules do not have to follow the U.S. rules, but we agree that they can live side by side. They accomplish a similar objective. This was a huge win for U.S. multinationals. Because, again, think of our administration. We do not change our rules because somebody in Paris thinks we should change our rules. That's just politically is not going to happen here. So I think this was Treasury Bessent really getting a compromise. It's like, okay, here's where our political climate is. The OECD did not want the U.S. to opt out and not participate and just say, go about your business, we're doing it our own way. They wanted us to stay at the table, so they got this side-by-side agreement. Pillar 1 is that concept of increasing the amount of global profits attributable to customer locations. So think of Amazon selling into France without a French operation. France's perspective is, the only reason that French customer can buy from you is because I create a society, a workforce, a judicial system, a law enforcement system that allows that person to make that amount of money to purchase your goods. You need to participate in supporting that infrastructure. That's the concept that the customer locations are saying is, you can't just, tap the wealth of my country without providing something to help it stay in place. It's a reasonable perspective. Again, the companies are saying, that sounds good, but how are you going to do it? Because I'm worried about the details. Okay? That's pillar 1. Pillar 1 has fallen behind in implementation from pillar 2 because the details are really hard. And you're talking about, the OECD is 145 countries. Think of the U.S. We can't get our act together very often to get legislation across just in the United States. Think about 145 countries. And everybody's thinking they got the answer in this and that. So it's like, it's really impressive that we've gotten this far. But watching football playoffs, how do you get it in the end zone, right? The details. So that's why Pillar 1 is kind of falling back. It's still a priority, but it's just bogged down in implementation. Okay? The U.S. participation, I'll mention, right? They need a compromise in Pillar 2, that side-by-side arrangement. They're still leery of Pillar 1, but I would just offer that it's very fragile, the U.S. participation, right? We have policy that can come out in tweets. We have things that can turn on a dime, right? We have a president who wants to meddle with companies and who should do what and what, that type of thing. So it's just to be cognizant of this, that the U.S. is the largest economy in the world. Got an eye on this. They want to participate, but they're not going to take direction from them. But they're trying to protect their U.S. companies. But at any point in time, things can go off the rails, right? Where the U.S. just pulls the plug out. George, do you have a point?
Yeah, I wanted to ask, so for companies like Amazon,
Yep.
Shane, for example, Shane, which is in China, so it sells products in the US. So at what point does the US like this?
Okay. That is chapter 10, my friend. So we're going to talk about that. But that's very important. At what threshold of activity do you trigger becoming a taxpayer? And that's where that threshold used to be very boots on the ground, bricks and mortar. It's lowered from that, historical norms, but it's still a huge question for companies. Both outbound or inbound investment from abroad into the United States and the U.S. doing the same thing in other countries. And so a lot of times you will, on an expansion project, you'll spend a lot of time helping companies kind of nuance about how do you allow them to do their business expansion with or without triggering local taxation. So it just depends, and we're going to get into those details. But it's really, really important because you don't want to find out 4 years later that you were subject to tax 4 years earlier. Really messy because you haven't been filing tax returns, you haven't been paying tax. So you need to know where the line is and then say, okay, at this point we are now a taxpayer. That's my position. Now, the governments might not agree with that, but at least you've started somewhere. Okay, so we will pick up with this and we'll start chapter 1 on Wednesday. Okay? Any questions? All right, have fun today.
No, I read that on like
Yeah, so but it extends beyond
yeah.
But how you accumulate those 24 hours?
So I got the 14th off for Mardi Gras. However, after that, Vance asked me about Valentine's Day. So we're going to do something on the 13th so we can still do Mardi Gras. Okay, that's what I was going to ask about because I was like, I figured she'll want to meet you at that point. Yeah. I have a feeling. Okay,
Yeah, I've never done it, so I don't really know what to expect. I think it's close to